So hello guys, welcome back to my channel. So today's topic will be about volume profiles, role and roles of volume profile on this weekly crash of market in gold. So we'll be understanding the reason and psychology behind this move, why it happened and what will be happening next, because all of these will be our next week's movements that we will be discussing right now. And these may be or maybe not right, because this is just a theoretical approach to the market. So basically market just does whatever it does, because market is an algorithmic coding. It can do whatever it wants based on the coding teachings it had. And so we will be discussing about those levels right now. Basically, so we are right on 4-hour chart. If we were to be swing these volume profile levels, we will be noting and seeing these areas that we have. So basically we have an unmitigated, untouched old highs right here. You can see it here, and old lows here, which are still providing liquidity here. If we were to be zooming out, we will be seeing volume imbalance here. As you can see here, we can see a little bit volume imbalance. So we will be understanding it as fair value gap area from here till the beginning that we are seeing here. It should be our main area of focus in the bearish trend. Right now we have this high and this low. If I were to draw it in a big label, we will be receiving 5 quadrants, and this is our 75% area of daily rate. It is extreme premium. Right now as we can see this sweep right above the high of this high. This is a sweep that we can see performed right after we saw a down move. It happened till we had this low been protected, as we can see order block. This order block is working as a mitigating block for these orders that were performed here. You can see this area. This is a clear indication and consolidation area for institutions, because institutions like to enter on these types of area where there is previous volume. If I were to show you this on volume profile methods, it should be from here to here. We can clearly see this area is the volume value area, and this value area, this is our extreme point of low of value area, and this is our extreme point of value area high. So both of these indicate that there is a balanced price range in between this area, and right at this area we receive this low volume node. As you can see, we saw rejection right at this area. If we were to delete this and go a little ahead, we will also this volume profile area here. We can see clear highs and clear lows of this profile. This profile is clearly showing us that the when price action entered this volume or area, we saw a back reaction, like a rejection, but it clearly stopped at this high. It failed to take this high. So what does this mean? It clearly indicates that here the buyer's interest or the interest area for buyers has been decreased and the selling interest area has been established, and price has entered a price discovery area, but it still failed because what, it wasn't pre-recognized area where price should reverse. Because in US market, if I explain the clear psychological reasoning about this move, we should see US stock market. For US stock market, we will be seeing US 500 because it is the benchmark for these areas. So as we can clearly see on a daily time frame, this was first on range bound area because of this pump move. So I want you to go a little backward and see the gold movements right here. It is about 9 October or 9 to 6th October from till uh, 13th October. If we were to go on back to gold, I want you to clearly note these areas because these areas will be very uh, uh, it is here. It is now here. You can see from 9th October we clearly see a pump here. Because of what? Because the money from US stock market was flowing in gold. It gave gold what? It gave gold a clear push. Clear push for what? To give this value area. As you can see, it was at the extreme point of value area. Here the market was in consolidation range. It just range bound. It was in range bound area. It broke this range area and it uh, flew all the way till here, where we received a rejection because the US stock market was dumping. And at this point, when US stock market was in a crash, gold was in a pump. Here we see the clear uh, ceiling areas, and we can basically anticipate right now the gold has entered a bearish price because of what? It should be as I will be try to show you on lower time frame, because on daily time frame it is sometimes difficult to understand for new traders. As we can see a low volume node here, this is a clear low volume node area, and right at this point we receive this. It is what we call a fair value gap. And when, as a volume profile trader, I love these types of area when we have low volume node plus FVG here, and we see clear respect for, we will be taking this node from here because here we can see volume imbalance from here. If we want to zoom it out, we will be seeing a clear volume imbalance here. For your confirmation, I will let you show this area. Here you can see this volume imbalance right at this point. So we'll be taking it from here till the wick here, and it will be our FVG. And I want you to look a little backward. We can see this. It is a bearish balance price range. When we have these kind of inverted fair value gap and a bullish fair value gap, it creates a balanced price range, which basically stands for an area in my terms that when we have a low volume low plus clear indication of inefficiency right at this area, it is a clear inefficiency. We have a fair value gap here, but it's too far from the price to reach. And if price broke this high, because of what? Because this high right here is a pool of liquidity. We have a relatively equal highs here, and for easiness I would draw this trend line here. This trend line clearly indicates engineered liquidity. When engineered liquidity has been already engineered by the IPDA system, we always wait for this candle or another candle or candle after that. We want this area to be broken, at least this area, because when this area has clearly been broken, we now have another tap at balance price range plus CE area of FVG would give us double confirmation right now that there is a very high chance for price to reject this area because of low volume node. It gives clear rejections and clear uh, uh, composite passes. And uh, as I'm basically a big fan for ICT concepts, I like the way Michael defines these type of ranges. Just these type of ranges. I will just get it just right here. Now we have first, second, third, and fourth quadrant. In this quadrant, the first and second quadrant are more important, and the third quadrant is less important because right now we have clear equal highs and lows here, but the market direction is clearly upper right now because we have an efficiency to fill and a pool of liquidity to grab. So the market will come till this swing high point. I want this swing high point to be clearly taken, because when this swing point high is taken, I will receive my confirmation that right now big players has entered this area, because we see a clear fair value gap till here, and when this area just a little bit tapped, we will see reaction till here. And I want these lows to be taken when we have reaction from this area, but because this is a 4-hour time frame area, we won't be able to see that much detail right now, so I will be going a little on a lower time frame area, and so we will be going to 1-hour time frame. In 1-hour time frame, we clearly see that the range that we were especially giving so much importance was basically just a consolidation area, and we have this double top here. Basically many retail traders will be thinking that not double top has been formed, and there is a resistance formed here, resistance, and this area will be very much of importance for retailers. And because of this relatively equal highs, they will be also thinking that this area right now has become a support, so they will be in very much optimism that when this price reaches this area, they will be looking for longs till this point of area or till this swing points. Basically more greedier ones will be waiting for this highs to be taken, But if we were, as we are smart money conceptual traders, we always like price to first take out the pool of liquidity on the opposite direction for us to give an even significant move in the opposite direction. So we always ideally want to price to go to at least this high and then reverse, because when the liquidity has been grabbed, hey, we will have confirmation that the market is going in our favor. If we are on this side for shorts, we will be clearly targeting these lows, or at least these lows, if you don't want to risk, because when market usually enters these areas, it gives like these types of moves, like a clear seek and destroy profile. But when eventually it comes and grabs these lows and shows a fake move to give retailers a hard time to point on the real move. So as you can see, this area, this is very much confusing for the new traders, because these types of areas usually become bound areas. From here to here we can clearly note dealing range. From here to here it just basically comes till 75% area. This is, as you know, being hand drawn by my. But if this type of scenario is also happen, we can go a little further backward. We can see the exact same thing I defined. As you can see, this the price comes till this high. It has just broken these highs. As you can, this high is broken, the price comes down, comes back down till this fair value area here, and low volume node. It clearly rejects this area. It gets clear rejection from this area. There is a volume pump here. It rejects, goes back till this high. It failed to break this high, then it comes back. Did not respect those parallel areas, but respected this order block. This order block, which is also formed, has a inversion fair value gap. It came just right at the coefficient area of this order block, particular order block. Then it reversed like a magic move happened. But if you were to note the date that this move happened, you clearly know what happened. As you can see, this was 9th of October. It is exactly the same area or price point in time axis where US market received a dump crash and gold perceived a very new all-time high till this point of time here. As you can clearly see, if we were to be having this same risk to reward ratio from here, it is astronomically high. It is at least 3 to 6 RR, but usually these types of moves are hard to capture, so we always have to uh, play a part in these types of ranges. So if we were to delete this, now we will be focusing on this. Right now I have clearly defined that we can see what we also have this fair value area here, and as you can see, price came got rejection at this low volume node, goes back up, but receives a rejection at high volume node here, comes back down, and again receives a rejection at low volume node, and it goes but absorbs orders here from this balance price range. As you can see, this is also clear balance price, and if we go further beyond this, we receive this swing point high and an inversion order block. As for trend, this is a clear order block, but it was disrespected, though it became a breaker block. So this breaker blocks has a clear potential for reversal market area, because when the breaker block and the order block is broken, it becomes a breaker block, and breaker blocks are basically quite good support areas. I personally like breaker blocks because they are particularly useful than normal order blocks like this one here. This order block works, but it gives sometimes not clear indication when it will work and when it will not. So we always have to be on standby for these types of uh, unpredictable moves of market makers, because the goal is there are a lot of times when the market is manually controlled by market makers. So gold is a risky asset, as we all know. If we were to draw this trend line, it was clearly broken here, as you can clearly see. I at least want this to go up here. I just don't want this kind of unrealistic expectation for the gold to touch this high, but at least I want the gold to come to this point or this point, because if it comes till here, I will an extra plus confirmation with liquidity pool sweep. That is a type and fill of inefficiency here, because I clearly have this low volume node area with a little volume pumps, but I also have this point of control, as you can see from here. I have this point of control till here. If it comes and touches this point of control, we will have an explosive move down below till 4,000 points, because at 4,000 3,984.17 points of gold, we also have this liquidity pool. So it should clearly come down to this. So for what we have to take clear note right now is that price should come and get these highs, or there can be sometimes some kind of unpredictable area or time when the market just comes and does not take liquidity and just goes straight downward. So in this case, we want price to break this breaker block and this balance price range, and come till this fair value gap area. If it was also rejected from here, then we could clearly see an indication till this liquidity pool. So if it does not and speedily breaks this fair value gap area, then we will be waiting for this confirmation and order block, because this order block also gives us this inversion bearish fair value gap. Bearish inversion fair value gap sometimes are very useful when we when these types of fair value gaps overlap with order blocks here, and so it gives a clear indication for rejection, and markets many times just comes, taps and goes right there, and then we receive that the move we weren't anticipating, a big move. I particularly like the models where we have clearly sweep from these areas, but as we know, the market is not run by sentiment, it is run by an algorithm. So we will have to be adaptable in these kind of scenarios. And as for 15-minute charts, we can clearly mark and know those areas that we were waiting for. This area, what I indicated, the liquidity pool also has this point of control and value area high, And if we are to zoom out a little, we will also note that we have this low volume node, and if we were to go further backward, we also receive this low volume node. And if we were to go a little bit more, zooming in out, we see the consolidation area. I particularly like these areas because at these areas we receive explosive moves. Now if when these two overlap, that is just above the real liquidity pool. When price gives us clear rejection at this area, this or this both are the same because it is in the 50% area of balance price range. It is, and the right, this area is the low of consolidation, that which is a markup phase in Scout Snapper basic field guide of ICT. I particularly like those videos of his because he clearly explains how the price action really works in algorithmic way, and I kind of implement those ideas. And we can also see this order block like this. It can also help us recognize if this is swept, it should be broken. In my case of scenario, it should be broken, and this high should be respected, not this one, because this has been clearly respected once. So this high to be respected or swept. If it is swept, then I will be on the short side. That was the whole story behind the move, and so you can clearly now understand what will be the next move of gold. So overall, I gave you a review that on 4-hour time frame we are clearly on bearish side of area, and it is right in the dealing range of a bearish range. SOE, we want 50% area, or at least the balance price range to be tapped for it to go downward further below. And on 1 minute microstructure, 1 hour market microstructure, we clearly note these patterns and this range bound area. And if I were to show you the exact volume profile I love to use in this area, that is this volume profile area, because it gives me the real candle based movement. As you can see, the orange candles show strong volume for sell side, and the sky blue color candles show strong volume for buy side. And right at this point you can see buying side uh, candle, sky blue candle. So there is a very high pressure here for buy side, but it was rejected because of what? Because this is a consolidation area, a point of interest area for institutions, and this is a low volume node, which further adds to our confirmation for this consolidation area, that this area should be the rejection point for our next downward move. So in my case and in my analysis, the gold is in bearish, because if we clearly and unhesitatingly see the US stock market in upward trend without any uh, uh, stoppage from other things, then I would be on further bearish attempts. So I will be on daily time frame. As you can see, we are clearly receiving this pump. This high has been clearly taken, and body has closed above the volume area high and above the swing high. It is right now on all-time high. This is a new all-time high. So right now the price has just broken past this area. I want price to further go upward for the gold to be bearish. If this price comes back into this range, this volume profile value error, and then both of them can encounter a pound range area. And if we were to be further capitalizing on this opportunity, I would like you to note how US market is performing here, because US 500 is the king of US capital markets. It clearly shows the dollar index is right now, I think, at 93 points. I want the dollar index to further go above, because it will give us that the US dollar is strengthening, and other assets will go down, because when uh, US dollar appreciates, all other currency pairs decrease, and the commodities price decrease, not in value but in price, because when the value of an currency increase, its price, its values of the price, same amount of price becomes more heavier. So in my logic and in my understanding, I want the both ideal case of scenarios for my analysis to be quite perfect and quite working. So hopefully the market plays just like I had analyzed, and I want the market to perform those moves. As you can see on daily time frame, the gold has clear markings. It is the balanced price range area in this consolidation area. It also is a fair value gap area. I want this fair value gaps, this candle, to first grab this liquidity above those highs, then come back and close uh, right below this quadrant, this 25% quadrant. I will also give you another advice. You should clearly mark the highs and lows for the previous daily candle, because previous daily candle always give you the exact location for your liquidity that was produced on the previous day. So always they have this in your mind. It will help you in your analysis, and it should be quite helpful for in your journey. So see you later guys, and that was all I have to say, and thank you for, and don't forget to like, share and subscribe my YouTube channel. It will be very helpful for me, because right now I'm in my starting phase of the trading journey. It is right my own analysis based on the things I've learned in the previous year on ICT concept and price action theories that I've learned. I especially like ICT's concept, but when those concepts are uh, blended with volume profiles, because in my understanding most of the ICT's logic are sound and clear, but you know, in some occasions those concepts don't work. And in my years worth of journey, I have noticed that whenever those concepts fail, volume profile and its level work there. So always like volume profile to be perfectly aligned with ICT's concept for me to give a clear bias for my trading directions and my trading methodologies. So see you in later videos. Uh, God bless you.